morning, good morning. Mr. Tuvin, I think we probably want to get started because I think you've got a lot of things that you want to talk about. Am I correct on that?
I can wait another minute if you
Okay.
want to, and then
Yeah,
we'll go from there.
people are a little sleepy this morning, it looks like.
Yeah.
Okay, looks like we should probably get started, Mr. Tuvin. What do you say?
Let's give it our best.
We will. Okay. Well, first of all, I just want to say a very good morning to everyone and welcome to our first Business Recovery Roundtable, Post-Pandemic Business Loans and Pivot Strategies with Eddie Tuvin, Chief Lending Officer at FSC First. My name is Lisa Smith. I'm the Executive Director of the Bowie Business Innovation Center. And this Recovery Roundtable is the first in an 8-month series of similar types of roundtables where we will be providing up-to-date information, particularly on financing and business best practice for the COVID-impacted businesses in the city of Bowie as well as in Prince George's County. This session is an important one in my view because we need to kind of get everybody focused, and we know that, I know from our work at Bowie Vic, where we work with 1,500 entrepreneurs a year, that all the questions we're getting are around financing, how do we do it, how do we make it work for our businesses? And so we're really, really pleased that we're able to have Eddie with us this morning. Bowie Vic is a hub for business acceleration. We're located on the campus of Bowie State University. When we were planning this, I knew that we had to have a really super first roundtable, and the very first person that I wanted to invite to speak was my colleague Eddie Tuvin from FSC First. And so having said that, Eddie, I'm just going to say to our folks, the chat box is open. You're expecting to have lots of questions, and I want to say, take it away, Mr. Tuvin. Thank you.
Thank you, Ms. Smith. I appreciate that. It's very kind of you. Thank you all for joining today, and I hope that everyone has had a good new year and a healthy new year, and that we're surviving to get through to the end of this pandemic quickly. I am both a practitioner and a banker, as well as an advocate for small business on Capitol Hill, and I've been doing this for quite some time. I'm very fortunate to have joined FSC First just days before the pandemic really started in March as their chief lending officer, to work in conjunction with my colleagues there, Shelley Gross-Wade, my friend Dawn, and others who have dedicated themselves to the support of our small minority women-owned businesses, primarily in Montgomery and Prince George's County, and all through the state of Maryland. We work with approximately 12 programs, and I'm going to go through them today to give you an idea as to what you might use for your business. And by all means, please ask questions, and Lisa will let me know what they are as we go through the day. We are a lending partner, but we are not a bank. We provide SBA 504 lending, which is for owner-occupied real estate, and we also administer and provide funds on behalf of several municipalities, the state, the lottery fund, for example, and the county. And we just came off of a huge effort where we administered several programs on behalf of the county, which were leader programs. We were the first county to do this in the state to help small businesses with grants up to $100,000 for support. And then we picked up with some other programs that were very targeted specifically. One was toward restaurants from the state of Maryland, and then another one was for daycare facilities and things of that nature. But our primary day-to-day business is small business direct lending that relates to the creation of jobs and the maintenance of jobs in the county. The primary loan that we deal with, the SBA 504 loan you'll see here, is a loan from $250,000 to $5.5 million, but that's misleading because that loan works in conjunction with other loans from a bank in the first lien position. So the bank, a typical bank like an M&T or an Eagle Bank, would come in and they would lend up to 50% of the cost of purchasing like an office condo or a warehouse or a small office space in a facility that you could own rather than rent. And we come in with a second lien so that if it's an existing property and it's multi-purpose, it can be as little as 10% down. And the value of that is that it helps the small business utilize their capital for the business and not necessarily for the real estate, but at the same time, you can create this flat line where you know your expense for your real estate is never going to increase. Before I get into some of the other funds, there's some things that those of you who are here today have heard me speak before talk about. So one of those is, before you go to the bank, make sure you have your act together. Make sure you have a business plan that makes sense, that's defendable, that you can actually defend yourself when the loan officer at the bank starts asking questions about it. If you went and had it made by someone else and it was the best in the world, but you can't speak to it, that's not going to give the banker a lot of confidence in your capabilities. And they're looking for one particular thing, that you're going to pay them the first of the month, every single month, for the entire term of the loan, no matter how long that is, without question, without delay. That's it. And they want to make sure that you're not using your last nickel in order to be able to pay them. And so you've always heard me talk about it, and I'll bring it up again. Debt service coverage ratio is really important. You need to be able to speak the language of the banker so that you can come to the bank and say, I'm looking for $1.3 million. I'm purchasing a building for this amount. I'm going to have soft costs and renovation of that amount. And included in my soft cost is going to be 3 months of carrying costs for interest because I think it's going to take me that long to renovate it for my use before I can get in. Here's my budget from a contractor that says we can do it this way. I have some long lead equipment that I need money for as well. And here's the bids for that. I'm going to get my license, and I've got everything in order for that, in order to do the business that I'm going to do. And by the way I calculate it, I see that over X years at this rate, my payment would be this. And here's my pro forma. Here's my budget. Look, at the end of the day, after all my expenses, I'll have $1,000 left over to pay your $750 a month mortgage. And I'm covered. And then calculate what that ratio is and tell them right up front. That's going to buy you so much in value and give them so much comfort that you really know what you're doing. And that you're not taking a box of expenses at the very end of the year and dropping them off at some accountant's office and saying, okay, now do my taxes, because they know If that's the case, there's no way you are able to navigate your business, because on a monthly basis, you don't know what your expenses are if you're operating in that way. So you need to have all that available, and you need to be on target with those numbers so that you can be a really great manager. Just separate and aside from the expertise that you have as an entrepreneur to run your business, you also have to be a good financial manager to get the confidence that these lenders want, especially today when they're all pretty scared about what's happening in our economy. Some of the different programs that are smaller that we also manage at FSC First. We have the Small Business Growth Fund, which we call the Community Advantage Fund. If anyone's familiar with the SBA 7A loan program, that program allows you to use money for other than machinery and equipment and real estate, which is what the 504 loan is limited to. This program can be used for other things, including real estate transactions and equipment, but between $25,000 and $250,000. Now, if you wanted micro loans with working capital, we have a facility from $25,000 to $50,000 called the Micro Enterprise Loan Program that we could do, and we could offer that to you. If your business happens to be in the city of New Carrollton, we're involved with their Economic Incentive Revolving Loan Fund, and we could help you with getting funding for like improvements for a commercial building, reconstructing, remodeling, and so forth, and even working capital and inventory if that was the case. We have our Small Business Flex Fund, which is part of the state. I told you that we represented the state of Maryland, and this is from the Department of Commerce. And these loans help with no requirement for a government guarantee or the funding of the loan loss reserves. They have a $25,000 to $250,000 range, and they can be used for working capital needs. But you have to be able to come to a lender. Again, I'm going to repeat what I'm saying. And the question that you need to have answered before you get there is, who are the checks being written to? A lot of people walk in and say, oh, I need working capital. Great. How much do you need? This number. Great. Well, that's more than you even put in the business yourself in terms of equity. So where's this money going to? Oh, you know, payroll, overhead. That's not really good enough. You really need to be specific, and you need to show, I need this amount to pay to this person for this reason in month number 2. In month number 4, I need this amount to pay to this person. They need to know that you have a plan and that you're going to stick to it as best as you can. For those people who are along the purple line that are impacted by what's going on with construction, we have funding for that. The city of Bowie has allowed us to administer a revolving loan program from $25,000 to $50,000. And in a minute, you're going to see the Mount Rainier program that's very similar, but they reduced it recently to $25,000. So keep that in the back of your minds. If you're in any of those areas, you may qualify for this loan to the extent that you need it. Give us a call and let us know. Now, with Pepco Exelon, our local provider, utility provider, they sponsored a program to help small businesses with direct loans or loan guarantees or loan loss reserves, meaning they'll step in and allow us to put money up for a local bank to provide collateral so that in the event your loan might default, they have a fallback in cash sitting in an account that was provided by Pepco Exelon. And it's for up to $250,000. And really, we're looking for commercial building energy efficiency improvements, energy conservation, and renewable energy measures that you're going to be financing with that money, and go from there. And certainly, when we think about pivot strategies, one of the things that we think about is how can we cut back our expenses without cutting back the service offerings? Because really what we need now is we need to reduce the expenses, but we need to give even more service than we ever did. We need to draw in more customers. We need to retain those customers. We need to think about other types of business that we can do under the same umbrella that aligns with what we do, but adds another revenue stream to what we've been doing. And restaurants are a great example. They've done so many different things, and they've been through such tragedy with having to open and close and open and close, and then being able to move out
Right.
onto the curb, but then they had to buy equipment to move out on the curb, and then it got cold, and then they were told, you better take it in from the curb, we may have a riot. And now we're back to, okay, let's see if we can reopen some dining rooms. Let's use whatever social distancing the different municipalities have wherever we are, because they're different in different cities and different counties. And let's see whether or not we can add other revenue streams. So we're going to do a delivery service. We're going to hook up with Uber, and we're going to start delivering outside of what our general area was. We're going to start packaging and shipping it on dry ice. I've seen some people do that, or package, baked goods and start selling them all across the country, thanks to, publicity from TV shows and things of that nature. And a lot of them have aligned themselves with various different charities to help get some of that publicity. So if you look at the Georgetown Butcher, for example, and you look at what Wendell did, Wendell started a business in the middle of a pandemic. And he started a business that sells high-end meats. So this is not really what you would call a necessity, but he also is involved in charities that help kids get jobs and educate them and get training on those jobs so they can get a better off start in life. And as a result, he got a lot of free publicity off of social media accounts, including a number of famous actors and actresses. And the next thing you know, he's opening up a second shop in the middle of the pandemic because he was so busy that it made sense for him to do it. So now he has a butcher shop, and he also has a fishmonger shop in Georgetown. Take a look at what he does. You can find it out on the web. Now, the EDI fund is a variable amount, and it's based again on job creation. So if you have a project and you're starting a business and it's going to be something that you can commit to and you guarantee there's going to be a certain amount of jobs created, we have a program that you may come to us. And there's more on our website about this, and there's more below. You can see that there's the Contractors Advantage program, which is specific to local contractors with up to a 25% guarantee from the county and lines of credit up to 24 months, where we work with our partners. Here we mentioned some of them, additional ones to the ones I mentioned earlier: Revere Bank, Sona Bank, Industrial Bank. And then there's the Special Assistance for Local Entrepreneurs, where they're at least 51% owned by a county resident. We have some funds for that. And then there's a separate program that's an energy efficiency program, where if you're performing work, like you need to update your electrical system, your panel is outdated and it's a fire hazard, and at the same time, you need a new heat pump, and so you're going to get one that's energy efficient. We can do loans that are around 20 years that get added onto your tax bill. And so because it's a 20-year amortization, the payment's very small, but it'll help you get the funds that you need to help reduce your overall costs. So even if it pays itself back, say from an expense perspective, in 5 or 6 years, because you save so much energy that you helped recover that cost, you don't have to pay for it for over 20 years. So it's a great program, and I think more and more small businesses, once we get through the pandemic, will start to be able to focus on this. Now, there have been a number of different grant programs, and many of you participated in them. I recognize a few names here on the screen. It's good to see you all. And as you know, the state had a loan program through the Department of Commerce. It went very quickly in terms of, when I say it went, I mean the funds were just used up almost in days. The first round of PPP, we saw those funds were really taken off the street quickly, and it was difficult for many people because of certain banks doing certain things. This bank wouldn't do a PPP loan unless you had 2 different products. That bank wouldn't do it unless this or that. And there were also some third parties, which we'll talk about, that were doing those loans. We administered the $20 million for Prince George's County government for small business grants up to $100,000, depending on how many employees that you had, provided you were in the county for a minimum of 2 years operating, with tax returns to show that, and that the business was an ongoing and viable entity that was impacted by the pandemic and not impacted prior to that. So in other words, if your business wasn't doing well prior to, March, we weren't going to look at it and say, okay, yeah, we understand. You had other issues prior to that. And I'll just mention that if you do have issues, and if they're managerial type issues, we have places in the county that you can go, like Bowie Bic, and get education and get support and mentoring that are available. The Economic Development Department has outreach through Alicia Moran, and she can help with guidance. And we have the SBA office in College Park off of Route 1, which is affiliated with the Senior Corps of Retired Executives that we just call SCORE. And SCORE has individuals who were professionals that are generally retired from various different careers, and they try and match a professional in the SCORE program with the nature of the industry of the business that you're in, so you can get really good advice, like writing the business plan. I don't recommend that you go out and pay a lot of money to prepare a business plan, because when a bank looks at the value of your business, they're certainly not going to take into consideration the $5 or $10 or $15,000 that you had to pay for a business plan as an asset that increases. In fact, it's just going to be money down the drain, because you can go to SCORE and they'll help you. They'll send you a draft of what a good one looks like. They'll may even send you one from a similar industry as yours that they worked on in the past that may have been redacted, so you can't see the confidential information of the business. And they'll walk you through it with their experience step by step. So right now, there's really not a lot of grant money available that I know of. It's been exhausted pretty much. There's idle money that you could easily log into and obtain with a very short, it's less than 10 minutes to go to the SBA site, Google the idle loan program, put in your information and qualify for that if you haven't done that before. But what's coming next is the second round of the PPP loan program from the government, which is the Payroll Protection Program. And they've done a couple of things this time to help small, minority, and women-owned businesses. First of all, there's going to be a period of time when the initial loan applications are only going to be handled by the small banks, what I would call the Certified Development Financial Institutions, the CDFIs. The reason is they felt that during the first round that some of the monies that were intended to go to small businesses didn't make it, because small businesses were at a disadvantage. Maybe they didn't have the relationships that some of the bigger businesses had, or they didn't have a bank that had the same technology as some of the big banks had. So this time they're giving a window to allow small businesses a little bit of a head start. I suggest that you have all your documentation ready now, so that when the window opens up, which is going to be soon, that you're able to step forward and apply somewhere where you think you have a really great chance. And I'll talk more about that in a few minutes. But
Eddie, just a couple of questions, I guess. Are you answering questions now, or are we going to wait to the end? Because I know we're putting some in the chat box.
That's up to Lisa Smith, who we can't hear because she's muted. Jim Smith, I'll take your question right now.
Appreciate it. I had two. I wanted to know if you can talk. You talked about the idle loan program with SBA, and if you can just maybe give a little bit more background on who that's appropriate for, or who the limitations. And then in terms of EDI, we're a growing firm in terms of our work, and I wasn't clear if that fund was for a growing business that would need working capital to fund that growth.
Okay, I'm with you. So it's a, let me finish with PPP, and I'm going to come back to EIDL, which stands, it's EIDL, and it stands for Economic Injury Disaster Loan, okay?
Yep.
So first, let's go through PPP because I have everything up here on the screen for that, and then I'll jump to the EIDL screen, and we'll go there. So first of all, this is for specifically 300 or fewer employee businesses that have sustained a 25% or more revenue loss in any quarter of 2020 in comparison to a equal quarter of the prior year. So if it was the third quarter of 2020 that you had a 25% loss, or the second quarter, or the fourth quarter, they don't care. Just pick one and prove it. So have those numbers ready to show which quarter was the one in which you sustained your loss so that you qualify and that you're proven you have your employee roster that you're under 300 employees. Now, there is, as you'll see here, a calculation. So the maximum second draw is 2 million or 2.5 times your average monthly payroll. And if you're in the NAICS code 72, which is the hospitality and food service industry, so restaurants, hotels, and so on, they're getting 3.5 times. And that came out of negotiations with Senator Cardin and Senator Rubio over a need to help that particular industry, starting from the fact that chains had more than 500 employees, but less than 500 per location. And so they felt that it was fair that they be given an exemption to include those businesses into the PPP program round one, and they're giving them this benefit in PPP round two as well. So if you're seeking up to $150,000, there's just a simple certification process that you attest to, here's my quarterly revenue reductions, and I'm signing that I say that it's there. And I don't want to make light of that. They're trying to make it easier than what happened last time, but I'm also going to share with you, these are government funds. So if you abuse the use, there's a potential for misappropriation of government funds, and that's not a real good thing to do. You don't want to cross that line. And so there were some issues, as you probably saw with the first round, where businesses that shouldn't even have ever seen a dollar from the program, first of all, they had terrible publicity, negative publicity from it because they ended up in the newspapers. And then lastly, they had to give the money back. So most of our businesses in Prince George's County are small. They are going to qualify. People who used up their PPP round one can come back in and get some more money now, because we all know that what we're trying to do is just hang on and move the ball down the field so that we can get through this, get through the vaccinations, get herd immunity, get back to normal, and start normalizing the revenue streams associated with your businesses. Right now, there's full tax deductibility of business expenses on forgiven PPP loans. That was a clarification, and that's for both the first and the second. And so at least your CPA will have this information as we go forward with tax planning as that's coming up. And it's going to expand the forgivable expenses beyond the original eligibility to include supplier costs. So if you're out there and you had to pay your accountant, or you had some IT expenses or investments that you made in software because you had to do something to go, web service, web-based ordering or production or whatever, all that stuff can now be written off, and including PPP and things of that nature. So certification is going to be one page. In the CARES Act, there was a provision that said you had to deduct your EIDL money. So I'll come to that, Jim, in a minute. Your advance from the PPP loan forgiveness amount. So it provides $20 billion more for EIDL now. And you don't have to deduct what you received from EIDL off of what you've used appropriately and been granted forgiveness. So in the past, if you had an EIDL loan of, let's say 10,000, and you had $45,000 of forgiveness, you had to take 10,000 off that 45,000, and that's how you calculated that. And now you don't. Now it's a much better, cleaner. You know, you get the idle, you get this, keep moving. It provides $75 billion for SBA 7A loans. So if you had an SBA loan, you may have benefited from the fact that they paid for 6 months worth of your payments to your bank. And that really helped a lot of small businesses. So they're going to figure out how to do more with that. And then there's a possibility these 3 months of payments for the hardest hit businesses that belong to the 2 and 3 digit NAICS categories that have the most severe losses for 8 months, and for 6 months for new SBA 7A loans, kind of like what I just spoke about. Now, this gives me an opportunity to go to the web for a second, and I'm just going to do it right here. I think you can see my screen, and I'm going to go to SBA idle. And the reason why I want to do this is I want you all to see where it is and see where the application for it is, and to answer Jim's questions along the way. So the loan is for economic relief to a small business and nonprofits that are currently experiencing a loss of revenues. And here's all the qualifications. But the key is the application's right here. And it only takes minutes, literally, to fill out this information. It's not complicated at all. The purpose is to meet financial obligations and operating expenses that could have been met had the disaster not occurred. It's a loan. So it's a 3.75% for businesses fixed, or 2.75 for a nonprofit. But the deal is this: it's over 30 years. So you know when you're repaying a loan over 30 years that it's going to be amazing, because it's like next to nothing. So even though you do have to pay it back, first of all, there's no prepayment penalty if you wanted to pay it back sooner. I don't know why you would. But if you're using it and it helps you with your business expenses, it's not going to be a big additional burden to pay it back, because it's a repayment of principal and interest over 30 years, which is going to be negligible. So it only requires collateral for loans over $25,000. And they just use a UCC. You've probably seen UCC filings. If you get, a piece of equipment or something like that, people tend to file a UCC-1 to get a right. They're going to file it on business assets. That's basically what's going to happen. There are 2 different components on it. A loan is not forgivable, but an idle advance is forgivable, and they've been fully allocated and they're not currently available. So let's see what happens as we move forward. But, with the Biden administration and maybe potential for further relief after the 20th, God willing, that moves smoothly. We'll go from there. The eligibility is covered in the lower portion here. It was at one point, they had eliminated regular business and limited it to agricultural businesses because of what was going on, but that's not there. And then here, you'll see a data sheet, which hopefully is still here. And it's filled with all kinds of information and data that you need to be able to review it. And like I said, back here, I worked with a client who had called me and asked me for assistance with this, and it took him like 6 minutes to put his information in and get his idle. So, Jim, does that answer what your question was? Because I would log into this today at this website address up here, COVID-19 relief at sba.gov, and I'd see if you qualify and go from there.
Yeah, no, that's certainly helpful. I appreciate it. I just had one other question. I mean, I think sometimes some of us are thinking about, with so many different options, obviously there's some better choices than others. And I guess, Eddie, if we were to, come to FSC first, would you help us sort through, given our circumstances, what some of the best choices are, or do we need to try to figure that out before we try to engage with you?
Well, I would, Lisa Smith would, Alicia Moran Wood. This county is unbelievable in its support of our small businesses. At the beginning of the 2020, we were the leader in the state of Maryland in job creation, and we lost all that. And the reason that we are like that is because we have so much support from the county executive all the way down through the system. And yes, what you're talking about is technical assistance, and it can come through any of the people I just mentioned, and it can come through the SBA SCORE office that I mentioned, which has these amazing professionals. I work on Mondays from 1 to 4 in the Emerge Stronger program, which is helping local entrepreneurs really sit one-on-one and get educated about different aspects of their business that they have questions on, to a panel of really strong business executives from various different areas. There's a finance person, there's a person who was a CEO of a technology company, there's a person who is in really outside CFO kind of counseling and so on. And we've helped so many different people with strategies toward, how are they going to create new pivots? How are they going to find new funds? What's happening with their lenders? What lenders should they go to? And I should probably throw in here, when it comes to EIDL. So EIDL's a direct loan facility from the SBA, and you don't need to go through any bank to get that. But the PPP loan, that's going to go through a bank. So if you have an existing relationship for somebody with PPP, you need to make sure that you're in line to be able to step up when their application window opens. You need to be first in line to get in that, so that you get your money before the money gets spoken for and used up, because it's a limited amount of funds and it's going to be exhausted. And I think it's going to be exhausted rapidly because we're not through the pandemic, and we've had some, great major steps forward. But even with the disbursement of the vaccine, you've seen, Dr. Fauci and Dr. Brick speak to the fact that it hasn't been going as fast as they would have liked it to go. And the first thing that I'll always say is that if somebody's going to give you money that you don't ever have to pay back, yes, that's my number one priority, and that's the PPP forgiveness portion. So I would recommend to anybody who's listening to this that that's where they apply first. So use your local bank. The banks who were really impressive in the first round were M&T Bank, because they were very technology oriented and figured out a way to batch process the loans. So while other lenders literally took all hands on deck, and on the hour, every hour, the system would open up at SBA so they could upload loan requests, applications. And they might get through 1 or 2, and a quarter after, it kind of shut down. M&T was sending 10,000 at a time in one single stream with one press of a button, while the other ones were sitting there typing frantically, trying to get one at a time, one at a time, one at a time. And clients were sitting going, oh my God, a week just went by. I still don't have my number from the SBA. Another week went by. I don't have my number. Oh my, the funds ran out. And so, that scared people. So so beside your local bank that you have a relationship with, beside banks like M&T, there are some third-party providers that were involved in it, like Cabbage, for example, that you could have gone to, or American Express, who are also working in a very technology-forward way and could help you get that money that you needed. So that's the first part. Then when it comes to other things, the technical assistance providers are there to help, and there's so many qualified people that have such amazing backgrounds. If you look at Lisa's background and you look at Alicia's background, they have the contacts and connections to help get you in the door to people that, if they can't provide the answer for you or the direction, that will. And FSC First, we have similar, but we're also a direct lender. So just so everybody knows, my primary focus is ensuring that through the SBA 504 loan program, that we generate $20 million worth of 504 loans every single year. And that gives us the ability, if we do that, to do SBA 504 refinance and helping people move from where they're paying rent to where they're their own landlord, so that 20 years from now down the road, when they've paid off their loan and they decide they want to sell their business to their very, loyal employees, they can sell the business and lease the building back, and now they have a retirement program. That's the kind of thing that we advise.
Eddie, do you want to take some, do you want to continue, or do you want to take some questions from the chat box? What's your preference?
Please give me the questions from the chat box. Anybody else that has a question, please let's ask, and let's see what we can address, because we're pretty much through the presentation portion.
Okay.
And I'm open to however many questions we have.
The question that's just popped up is the Emerge Stronger program by invitation? My understanding.
The Emerge Stronger program is one that you can simply send an email to Alicia Moran and request that you be put on the agenda for a specific day when there's an opening. And you just have to be a business that is headquartered and located in Prince George's County, because it's a Prince George's County program. Her email is amoran, AMORAN @co.pg.md.us. And now we lost Lisa Smith. So does anyone else have another question? Or if you asked a question in the chat and you want to ask me now, please do so, because we need to get Lisa back online.
Yeah, hi, Eddie. Thank you so much for this presentation. I had a question, two questions. My first one was for the SBG fund. Does equipment include vehicles for mobile business? As I've had to try, I'm reconfiguring my business model, and it may have to become mobile. So does the SBG fund include vehicles for equipment? And then secondly, my next question was, can you offer some examples or scenarios for the EDI fund special assistant?
Mm-hmm. So
small business, no 0 to 1 employees. I kind of don't fit in all these other boxes. So I'm trying to be resourceful with other programs.
Sure, understood. Just yesterday, my partner in goodness, Stuart Smith, and I were discussing the utilization of funds for what you're calling rolling stock. So the biggest issue that lenders have with vehicles and boats and planes is that they can get up and move and disappear. And it's hard to claim the collateral when somebody defaults on a loan. And so a lot of lenders shy away from that. I would say to you that if you sent me an email that sometime next week, because our team meeting is this afternoon, so your timing is excellent, Amber. Sometime next week, I should have an answer for you as to how we would view that. When we're talking about EDI, you have to commit to, I am a Prince George's County business and I'm going to have a startup, and it's going to start with 4 people, but over a period of this much time, I guarantee that I will have X number of additional employees on the payroll. And if you don't, they'll take the money back. So you need to ensure that you have that capability, but then we should go out and look at exactly what you're doing and see where you might fit into other programs. Like you may fit in our Community Advantage program, depending on what you need the money for and what existing debt you already have and what collateral you have available and how your cash flow looks, how your personal credit looks, how long the business has been in business, and, you know, what's happening year to year, month to month, quarter to quarter, so that we can see that, you know, oh yeah, this makes sense. We can do this. It looks like Lisa Smith has sent out poll question number 1.
Actually,
So
Crystal sent it out for us, and I'm having some internet reliability issues. I apologize. I'm glad Amber jumped in because I couldn't see the question to read, so I'm glad she jumped in. But yeah, we're just asking Eddie to see how your remarks are resonating with the group, and yeah, they're very taken with what you're saying. So
Yeah, that's very helpful. Thank you so much, Eddie. I will send you an email because my service, I'm a massage therapist. And when this COVID thing first started, I had just put down a security deposit on space in Bowie, and then they had to, halt everybody. So that kind of put me in a place where now I'm like, look, I should just do mobile. So I'll go ahead and email you, not to take up time here with my special circumstance, but I
sure.
appreciate you. Thank you.
Sure, and that's a great idea. We used to have some people, I worked at a very, very forward-thinking organization based in Baltimore and Columbia for many, many years. I was the assistant to the CEO, and he used to have therapists come, and all you had to do was sign up, and it was on a massage chair, but it was awesome. So, being able to have a clean, mobile facility where people feel safe versus going to, like, across the street from me, the lady who owns the spa there, her problem is when she built her spa, she only separated the rooms with curtains. Well, it's not safe now. They're very close to each other, and so she's thinking about building walls, and then she's thinking about, what about the circulation of the air? How much fresh air do I have, and so on and so forth. So it's kind of a complex issue for your business, and we have quite a lot of these businesses around town. It's similar to the experience that the gyms are having, and how many people they can have close to each other in places like that. And so you have to also think about, maybe there's some pivot strategies associated with what you're doing, and providing service, if you're comfortable with it, in certain clients' homes and things like that, because there are people with mobility issues that may need your services that can't get out as frequently as they used to. And so it might be a good time to start to look at that as an option as well.
Thank you. Yes, absolutely.
You're welcome. A lot of the money that we gave as grants through the Prince George's County Fund, the Business Relief Initiative, that money was for PPE for businesses like yours. We did hair salons and all kinds of contact businesses. Lisa, did you have another question from the chat room?
I'm at a disadvantage because my internet collapsed several times during the session, and it wiped out the chat box that I could see. And so I just would ask the group if any of you, in addition to Amber, have, because that was the one that I remember.
Okay, I had a question.
Yes.
Okay, thanks so much, Lisa. Thank you just for organizing this, and the information has been extremely helpful. In the survey, in terms of registering for this, I know that it was mentioned that we might touch on how to address business closure. We were a healthcare agency that provided in-home care. And because we were not like a 10,000 person operation, it was next to impossible for many months to get PPE initially. And then after that, to be able to get tested. Or when tests weren't widely available, they were not allowing our nursing assistants to get them. So we did a temporary closure, and we would like to reopen. And I was wondering what resources or where to begin in terms of having that conversation.
Definitely start with the next round of PPP. Did you get the first round of PPP eventually?
We did not.
You didn't. Okay, so I would definitely start with this EIDLE program that I mentioned before. I would sign up for it today. If you're really considering, reopening, I would get the PPP, what quarter can you prove you had a significant loss, and so forth. And then I think that, you need to get back and plan for, in this new pandemic safe environment, given the precautions that you need to take, and given the way in which you're going to be able to service people now, how does the math look? How many customers can you service per day? What's that revenue going to look like? What are your expenses going to be associated with that? And at the end of the day, am I going to be profitable? Because if you're not profitable, it's not going to make sense in the long run as an ongoing business, right?
Right. No, I appreciate that feedback. This is one of the industries where the demand went up, but
Yep.
we weren't able to mitigate risk because the legislation hadn't caught up in terms of being able to test our employees and clients.
But now, you can easily go and just,
Right.
you have to wait in
Right.
line.
But it's possible.
Yes, now it's
Right.
much easier. So I would again, I would not challenge you, but I would say, not being an expert in every business, I would say to you, if I asked you to think about multiple revenue streams, if all your revenue was from this day one, is there two other revenue streams that you could add to your business model that work in this pandemic environment, but also that you could retain in the future, so that now you've got a balance of 3 different types of offerings that sort of take those peaks and valleys and smooth them out? One may be doing great at one period of time in the year, one may not be doing so great. That's how I would look at it. And this has been like a great period of time to go to somebody like at the SCORE office or Women's Business Center or Bowie BIC and create that. That's a business plan. That's a modification of your business plan. And I'm suggesting this is the right time to take a deep, hard look at that and see where you can make that happen for the long-term benefit of the business model.
That's great. Thanks so much for the reply. Those are definitely some things I'll think about.
I hope it was valuable. Now, Jim Smith asked if we are going to be recording this, and we did record this, and it will be distributed. It'll be available for posting. Hi, Young Goldson.
Yeah. It'll be on the Bowie Business Recovery website by Friday. We have a virtual library. So that should help a little bit, Eddie.
Yep. So,
okay.
Yes, Amber asked the questions about EDI funds, special assistance. Also, please go to my website, FSC First, and take a look at my website, which I'll share in a second since we have some time. And I'll go to the EDI fund and show you how to get more detail about that exact program. Is the Emerge Stronger program by invitation? Tahira, you're invited, so that's the end of that story. I gave you that email for Alicia before, so just please email her and tell her I invited you. But no, you don't need an invitation. You just need to contact her and get placed on the schedule.
I have another question.
Yes.
Initially, like I said, I started everything in Bowie, but if I'm going mobile, I guess my business address may change. And so that changes the county. Is there a Calvert County counterpart of this right here that you can connect me with, or how does that work? Just because I don't know what I would need to do at this point. My business originated and started in PG County, but if I'm configuring it, the model itself, that may change a lot of the foundational stuff.
Lisa, do you know the answer to that? Because I'm not familiar with that county.
Amber, I'm thinking that it would depend on what your business address is. If you maintain for state of Maryland assessment and taxation purposes and for tax purposes, if your address stays in Prince George's County, then you're considered a Prince George's County business, even if you're serving markets other places.
Okay, I got to check on that because I had a P.O. box and I believe that at some point, as though I remember, I think I needed a physical.
Yeah, you're gonna need a physical address if that's your address. I mean, if you're here in the county, we can certainly help provide you with a physical address to our affiliate program. And so you would get other benefits in addition to just a physical address. But that might be something to think about. But I wouldn't assume that you're a Calvert County company just because you're taking your services there. It's where you've registered your business and where, for tax purposes, your business is located.
Gotcha.
Yeah.
Thank you.
Good question. Good question.
Excellent question. So here's the FSC First website, and you can all see it's a simple fscfirst.com. And if you click on Learn and you go to Programs, since you're all expert in exactly what we do right now, you'll be very familiar with this at this point. There's a program brochure you can download here. Shout out to my colleague, Marissa Buster, for building this for us. It's amazing. But the interesting thing is that on the right-hand side, there's a little mustard-colored circle with a plus inside. So anytime you want to find out more about that program, you scroll to that and click on that particular piece. So we were talking about the EDI fund, and you click here, and the details associated with the whole program will show up. Eligible uses, that it has to create jobs, that this is the collateral they're looking for, that you will have to provide a personal guarantee, that it has to be in the county's developed tier, transit-oriented development areas, transforming neighborhood initiative areas, and so on, and that it's only for Prince George's County, which, thank goodness I said that before when we were in the other PowerPoint document. It's a up to 10-year maximum program with an amortization not to exceed 25 years. So that means that if you do get a 10-year maximum loan and it has a 25-year amortization, that at the very end, when it becomes fully term exhausted, that you're going to have to pay a balance at the end or refinance it somehow. It's at a 4% interest rate plus, depending on credit analysis. So it's like a 6% loan or something along that lines. And so that's how you figure it out. And then you can continue if you want with the other loan programs that we talked about today. There's Small Business Flex Fund is here, and all Strive for 35, all the things that you saw. There's the Mount Rainier program, the New Carrollton program. Everything is there for you. And I don't see any other questions, Lisa.
No. I just want to remind everyone that if they wanted to have an individual conversation with you, they can register for that through our website, bowiebusinessrecovery.com, and they can get a time slot to speak with you. And I believe that is next week. So they can get another round of this.
This was valuable. Thank you so much. I just found out about it yesterday, so I really appreciate this.
Well, we are so glad that you all joined us, and we will keep you posted. But you can also, in real time, read about what's happening in our world on bowiebusinessrecovery.com. And I'm putting it in the chat box right now. So there you go. And that's on all the information that you registered today has that same information too. So, and that's where you can find recordings, you can find upcoming events. And we're going to have actually SBA as one of our speakers later this month as well. And by then we'll have lots of update on round 2 of PPP, won't we, Eddie?
Yep. we better. So, well, thank you everybody on behalf of FSC First. We appreciate the opportunity to work with Bowie BIC and give you this information. I'm representing, of course, Shelley Gross-Wade and Dawn Medley here so that we can provide for you a great opportunity to be able to start grow and maintain a business in Prince George's County with the help of our illustrious and wonderful county executive, Ms. Alsobrook. So thank you, Lisa, for having me.
Thanks to all. We're just getting started, so we've got months and months of these kind of activities, so just stay tuned and keep checking the Business Recovery website. Eddie, thanks very much. Chocolate bars and roses coming your way later. Okay, goodbye to all. Thank you.